Hey, this is Trader Travis, and I am currently on a mission to share with as many people as I can a path to creating financial freedom in 5 to 10 years. And today, what I'm going to do is walk you through a case study, the beginning of a case study, because I entered the 2022 US Investing Championship. So I want to walk you through that. But before I get to that, let me throw up a short intro for those who are not familiar with me. My name is Travis Wilkerson. I am a former US Investing Champion for the Futures and Options Division, but I go by Trader Travis online. Now, there's nothing particularly special about me. I'm an average dude, live in an average house, for the most part, drive average cars. You won't see any Lamborghinis and things on this channel. And I grew up American poor, right? In a house with no running water or bathroom. We had like a 5-gallon paint bucket that we used as a toilet. We had an outhouse outside, so our bucket was our inside toilet. Again, the house had no running water or bathroom, and we had like a well, like a spigot. For those who know, you kind of prime the pump, you pump it, we put it. Anyway, the point was, it was a rough environment. To finish this story, well, we used to pump water into these buckets. We heat them up on the stove, and then we pour all the water in a galvanized tin tub. The way those environments worked, or at least in our household, is once you heat up water, it takes probably a good hour to heat up enough water to fill up this big galvanized tin tub for you to take a bath, right? And the parents usually go first and the kids will go after. Now, as a kid, you don't think about it, but as an adult, I'm like, ew, that's gross. Like, because you don't dump out the water after every person takes a bath because it takes so long. So everybody pretty much takes a bath in the same water. You just take turns, and the kids are always last. All right, so as I said in the beginning, I am here to walk you through my trades, my initial trades, because I'm going to make this a 1-year-long case study. As I do the competition, I place trades. Whatever performance I get, if I win, if I hit the top 10, I want you to see, why and how I was able to do that. Another admin note is, for those who don't know, I usually start a fast at the beginning of each year. So I'm currently on my fast. I started 2 days ago, but this is day 1 of the liquid portion of it. So I ease into it with low calories, like 500, maybe 1,000 calories a day. And now I'm on the January 1st of 2022, I'm on the liquid portion. So only water, coffee, and tea. And so I figured, I start the year off with a little discipline. It sets the tone for the rest of the year. Now, I'll do these fasts usually every year. Every fast is different, and the time frame is different. I think the longest one I've done is like 30 days. But that's not the purpose of this video. Just letting you know, in case my brain is not all there, it's because I don't have any food in my body. But anyway, enough of that. This is not a recommendation to do fast, just an FYI for those who follow me, who like knowing what am I doing? See, I can't even talk right. Anyway, US Investing Championship. I'm going to actually show you. So I'm going to pull up right now. This is a snapshot of my account on December 31st, 2021. That's the official start date of the competition. They take your account balance on that date, and that's what you start with. I think you need about $20,000 to enter this competition. So this is one of my smaller accounts I decided to use for this competition. And I'll open up and show you these trades here, these initial trades here in a second. So what I'm going to do is show you exactly what I am doing to earn these returns. But since this is a competition, there are a couple of things I'm going to shy away from. And one is, I'm not sharing these trades for you to get into them, right? This is for educational, informational purposes only. It's not investment advice. The second thing I'm shying away from is, I'm not telling you exactly the why behind all of my moves, right? Those are templates I taught in some of my training programs. And so I want you to be clear that this is a case study. It's not a coaching session. I think YouTube is a horrible place to get coaching. If you need coaching, check the links in the description. I have a program, a partner with Market Club, and I teach our options class. And so if anybody wants to learn anything from me, that's the ground floor, right? You have to join that program before you would have access to anything else I teach. However, if you're already familiar enough with options, you can just look at what I'm doing and kind of figure it out your own. I give enough so people can fill in the gaps for those who are educated enough. If you're not educated enough, again, YouTube is a horrible place, in my opinion, to try to learn and get full coaching from. I think you need a little bit more guidance, but that's my biased opinion. Anyway, I still hope you find a few nuggets of wisdom in these videos, because I think not many people share this much detail. Not many people share the exact trades they're placing. I'd say over 90% of the stuff I I'm a YouTuber myself. I watch YouTube videos all the time, and 90% of it is theory. Not many people show you the exact trades they're making. They don't show you this detail. They brag about their winners, right? But they never show you how they got the winners. And they teach you a lot of theory, like, oh, here's a strategy you can use to get rich. But they don't show you the strategy in action, right? Well, here's them actually placing that strategy. So I don't really pay much attention to it unless they can show me proof that this strategy works and this strategy can help me make money, build wealth, and achieve financial freedom. So that's why I'm showing you this, because these tools with our stock options, well, stock and options actually, is what I use to achieve financial freedom in 5 to 10 years. So enough of my rambles. Let's get to it. So currently I'm known as a 10-minute trader. I got that name because it takes me about 10 minutes to find, place, and manage my option trades. And as of this recording, I also added one more distinction to my style. I am a 10-minute trader who follows a one stock blueprint, meaning that I make all of my money from and I trade only one stock. And that's the S&P 500. So that's what I want to show you in this investing championship case study, that my performance is just going to come from one simple stock. But I diversify my approach by overlaying several strategies on that one stock. I'll come back to my trades in a second, but here it is. So start date of competition, starting account value, you saw that in the picture a few seconds ago. I also wrote SPY at all-time highs, and that's important because I want to make sure I beat the S&P 500. My super simple initial trade plan, this may change depending on what the market does, or if Market Club tells me I need to change it. Market Club is stock trading software I use. It's not mine. It's just a third-party software I use. It's actually the most accurate software I've ever discovered. Not saying I've tried every software, but it's super reliable, and you'll see it throughout this case study because that's what I'm using. They have trade triangles, which are entry and exit signals. So this is the S&P 500. So I'll pull up a 5-year chart first. And so they have these long-term signals where you can get in on the green, get out on the red. So you can just look at here yourself. Don't believe anything I say. Believe your own eyes, right? If I tell you, hey, this is going to help me double my account, don't believe that. Only believe it if you see me do it, right? So you can just look here with your own eyes to see if you would have made money following these signals. Then they have intermediate signals, which they call weeklies. And so for people who want to get in and out in the middle of a trend. So the monthlies, another way of saying it, the monthlies are for the long-term trends, 1 to 2 year trends. The weeklies are for the intermediate trends. And so they're weeks. And so you can get in and out and avoid, most of the major declines. But regardless, if we put up a 5-year chart, you look at any major dip, the weeklies always trigger before the monthlies. And so the weeklies will get you out before the major declines. So again, this is my initial trade plan, and I'll keep it as is. I'm doing a series of SPX spreads, credit spreads. If you don't know what those are, you can Google them. Roughly 50% of my account is in SPY put options, right? Put options are stock insurance. They are how you make money when stocks fall. I use these to insure my 401k, IRAs, things like that. A lot of people don't realize you can insure your mutual funds. You just need to know how to do it. But these make money when stocks go down. And if you know anything about the stock market, it usually goes up more than it goes down. So why is over 50% of my account in stock insurance, right? You'll see why here in a second. Well, no, you'll see why throughout the year, because this is counterintuitive. A lot of people are like, this is stupid, Travis. Well, here's my philosophy here. Most people put 100% of their account in bullish strategies, meaning strategies that only work when the market goes up. And sometimes 100% of their account in options, and they make a lot of money, way more than I do. The problem with that is that when the market falls, which it does, right? It's just a natural tendency of the market. They lose so much money, it triggers this head trash, your survival mechanisms in your brain. And people freak out and do stupid stuff like cash out at the bottom. They sell when they should be buying more. And it just causes them to be completely irrational with their money. And so I have learned to be super conservative, put myself in a position to still make decent returns, but my survival mechanisms, my emotions aren't triggered as much. And you'll see this play out if the market crashes. So it's unreal. I have a template I won't share now for time's sake, but I put 80% of my account, 70% of my account in put options. And I still had like a 20-30% return throughout the year, even with 70% of my account in insurance. It was unreal. But I only discovered that by stepping outside of the matrix of what most option gurus teach, right? I stepped outside of their usual ways of trading, and I started exploring and testing other things myself. But that's a side tangent. Let's get back to this case study. All right, so roughly 50% of my account is going to be in SPI put options. Some of it is going to be tied up for these credit spreads. The broker ties up margin, basically what you can lose, the broker holds in case you lose money. Then whatever is left over, I put into the 3X growth strategy, which most people should know about because I'm doing a free case study on YouTube profiling that, trying to take 10 grand to 100,000, as well as take 2 grand to about 16,000. And you can just search my YouTube channel to find that case study. Then here's the key. Even though 50% of my account is in stock insurance, this is going to be the key that helps me make money. And this video is already long enough, so I've recorded a short lesson on compounding. Maybe I will put in video 2. Actually, no. The moment I compound one of my trades, I will record me compounding that trade and then share the short, it's like a minute lesson on compounding so you can see why I'm doing that. So I'll put that in my notes here to do that for you. And again, as I stated before, this is not investing. I think I said it. This is gambling. If I didn't say it, I'm saying it now. This is a professional's approach to gambling, but it's still gambling nonetheless. This is not how my personal accounts are set up. I'm a lot more conservative with my personal accounts. They're structured roughly 80% is in buy and hold. 80% is in SPY shares. I still trade only one stock. And then 20% is devoted to options trading. All right, let's come back here to my trades. Again, these are the trades. This is January 1st. And so let's come back to December 31st to start date of the competition. You can see the account balance up here, 37,356. Now, this is the next day. You see the same account balance here. And I just opened up the trades. These are not all of my initial trades. I actually, oh gosh, this is another story here. This is not finished. I actually have like 3 more trades to place, but I decided to try to, I was super excited. I decided to try to record a video at home while the kids are on winter break. And if anybody works from home during the pandemic with your kids there, you know how it is, right? House is peaceful, it's quiet. The moment you tell them, hey, I've got to get some work done. Yeah, I'm going to knock out this video and play some trades for work. You think everybody stays quiet? No. My wife decides to go in the kitchen to cook. In her defense, she let me know she was going in the kitchen. Think the kids stayed outside and played in the snow? Nope. They decided, oh, Daddy's recording a video. Let's come in the house and make all this noise and ruckus. And this pleasant Trader Travis that you're used to seeing in this video, which is not so pleasant behind the scenes, got crabby, was like, oh, F it, I'm scrapping the video. Just do what you want to do because you're going to do it anyway, right? It's like, all I wanted was 15 perfect minutes, and I couldn't even get that. So I got crabby, scrapped the video because you just heard me slamming doors, getting all pissed off, sighing, and I was all mad. I couldn't even place trades. So that's why this is not complete. Not blaming it on my kids, just my own fault because I shouldn't have waited until 15 minutes before the market closes. But here it is right here. You can see on 12/31, I was actually trying to set up this portfolio to record this video for you to get this out as quick as possible. You can see here me canceling orders. I'm not even going to go through all this. It's irrelevant. Basically, I was trying to set this up on December 31st. Orders were getting rejected. Prices were moving all around, and I was too crabby to think straight. So there are a couple of things missing here. So one of the things missing is I need my 3X growth strategy call option. So I have a 550 put. You can see the same positions down here at the bottom. I'm going to, actually in the orders a few seconds ago, you can see I was trying to buy 5 call options there at 550. So I still need to buy those. I don't know where the market's going to be Monday when the stock market opens, but irregardless, I'm going to buy as many call options as I can or I can afford. And actually, let me come here to the little document here. So I'll put the percentages here so you can see the breakdown. This is the way I'm structuring this is not based on where I think the market's going to go, deltas, thetas, all this other nonsense that people use. Well, it's not nonsense. It's actually valid. I just like to simplify things. I don't like to use those terms. And I simplify everything because I'm trying to teach it to my wife and kids. They don't want to hear about theta, gamma, and moving averages, anything like that. So I had to break everything down to percentages. Like, hey, buy this call option that's 10% higher than the stock versus, hey, buy a call option that's 10% out of the money with a delta of 30. They don't want to hear all that, right? So they can run a simple calculation right here. So SPY 474. My wife did this. I gave her a little piece of paper. I said, hey, buy a call option that's 10% higher. She knows to run this calculation. It's a math cheat. You multiply the stock price times 1.1. So if she bought a call option that's around 521, that's 10% higher than the price of the stock. That's terminology that she can understand versus 10% out of the money. Nobody, what's out of the money? A random person on the street doesn't know out of the money, but they know what higher means. What's higher than 474? 521 is higher than 474. So everything is broken down in percentages like that, including like how much I want tied up. And so I said, hey, put roughly 20% of this account in SPY call options. And I gave her a mock portfolio and she was able to do that. She showed me exactly which call option to buy, exactly which expiration and how many calls to buy. So I said about 20% of the account put in call options. So this is now me talking about my gambling template. Roughly 30% is going to be tied up in these credit spreads. And I've already told you roughly 50% is in put options here. So it's a balanced approach. 50% is devoted towards bullish strategies. If the market goes up, I'll make money. 50% is devoted towards bearish if the market goes down. Now, a lot of people think that there's no way to make money because it's so balanced, but options are so leveraged. You'll see it play out over time. I'm not going to tell you why it works. I just want you to see it. You have to see it to believe it, and then you have to experience it to really have faith and confidence that this will work for you if you choose to implement this very aggressive gambling template, which I'm not encouraging you to do, but I still want to show you what's possible. All right, let's come back here. So regardless of Monday, I'm going to actually buy as many call options as I can, try to type about 20% of the account in call options. How do I get that 20%? And this is another calculation I showed my wife. So the account is roughly 37,500 times 0.20 or 0.2 or 0.20, right? So I want about 7,500 worth of call options. It won't exactly be an even 75. It's as close as I can get. And that's the same reason I bought these 550 puts. It's a little bit higher than I would usually go, but it was cost. I wanted roughly 50% of my account into these put options. And so I just found two puts. I just found a couple of puts I could buy that will type about 50% of the account. And for ease of management for me, I just jump over the aisle, jump over the option chain is what they call, and then buy the call options there. And then for my credit spreads, as you can see here, I have a series of them. I wanted February, March, April, May, and June. I'm targeting around the same price point. I just set things up, and wherever it goes is wherever it goes. These are in the money. All right, I'll show you this on the option chain here. But basically, I need a March and a May. Those did not fill when I was trying to place these trades. And so let's come here, and you'll see how far in the money they are. And this is another thing where I had to unplug from the matrix of what other gurus teach. Other gurus teach you to sell way out of the money spreads, basically spreads that are way lower than wherever the stock is at because of the high probability or high win rate. Challenge with those is you have a high win rate, but man, when the market falls, you lose so much money, it's just not worth it. So I discovered that I actually have the same high win rate, 90 to 100% win rate, because I'm trading on other probabilities. The probability of the market continuing to do what it always does, go up. So my credit spreads are always further higher, as you can see here. Now, the challenge with mine is if the market doesn't go up, I lose money. But that rarely ever happens. But when it does go up, my risk reward is a lot better. So what I can make is equal to what I can lose. I usually get 100% return on my credit spreads. So anyway, I need to fill this out, and I need a March, and then I need a May, and then I'll be done. And I'll just leave this alone for a while. I trade once a month. It takes me about 10 minutes or less. Actually, it takes me about 2 minutes, but 10 minutes sounds better. So once a month, that's it. I show up at the end of each month. I look at my portfolio, see if there's anything I need to do. If there is, I place a trade. If not, I shut down. I come back the next month. So said another way, I've set myself up so I can literally ignore the market and my account for a month. However, I am a bit addicted to investing, so I do look at my account every day just to watch it fluctuate. That's actually how I learned this balanced approach. I watched how my account fluctuated when the market went up and went down. I was like, wow, even with the majority of my account in put options, I'm still making money. So that's how I learned all this, is actually by watching my account once I implemented certain blueprints. So last thing I'll leave you with, because I wanted this video to be 10 minutes, right? I'm a 10-minute trader, but this first one I'll make longer, and then the subsequent ones I'll probably try to make a little shorter. But there are two things, there are probably many things I want you to walk away with throughout this case study. But the main two is, one, you do not have to trade a lot to make a lot. People think you need to be a day trader, place all these different trades to make a lot. I want to show people you don't have to trade a lot to make a lot. And two, you don't need to follow a bunch of different stocks. Following the news, chasing the latest bright shiny object, reading quarterly reports, trying to figure out if your stocks have earnings coming up. It's a lot of work, right? I don't look at any of that. I don't even have any research to do. I'm only one stock. It's diversified. It's the S&P 500. It's like 500 of the best stocks. So you don't need to trade a lot. You don't need to trade a lot of stocks. And I can show you market beating returns with just one simple stock. But it's not a guarantee, but that's what I hope to show you. So you take care, and I will see you in the next training video. Bye-bye.